You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. It is time once again to wade into those turbulent futures options waters. Yes, it is time once again for TWIFO. My name, of course, Mark Longo from theoptionsinsider.com. Hope you're having a good trading week. Remember, if you want to join us for the awesome pro Q&A sessions during the week, you want to come back after Vol Views for a nice wrap-up, a after party for our broadcast week, if you will, then Options Oddities is the name of the game. It's going to be a fun one, especially if you like TWIFO. I got a feeling some of this may carry over. Some of the analysis we're doing may carry over into a little bit of oddities. Just leave that hint as it is. If you want to check it out for yourselves, head on over to the pro, theoptionsinsider.com/pro. If you get in there before the end of the week, that'll also get your name in the hat for the March Pro Trading Crate. Good luck to all of you whose name has already been entered. As we see who's entering the old CME Group hot seat this week, I'm pleased to welcome back our old pal, Mr. Kevin Green, the senior markets correspondent over there at the Schwab Network. Kevin, welcome back to TWIFO, sir.
Mark, I appreciate you having me. I hope everybody's having a prosperous trading, year so far with all this volatility, not only in the equity market, but also in futures and futures options. So thank you for having me on the show, man.
Yeah, it's been a while. It's been a couple of months since we've chatted with you on TWIFO. So a lot to get to as we dive right on into the movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show where we break down what's lighting it up to the light side and to the dark side over there at CME Group this week. I'm looking at the full report here, listeners, and we are biased to the green, but not quite as heavily as we have been in recent shows. I say we're hanging out 60-40, maybe. I guess it looks like 60-40, maybe 55-45. It's pretty close. Green over red this week. And also pretty close in our largest percentage movers out there, which is also kind of interesting. So not as biased of a week as we've seen in the past. That means, Kevin, there are quite a few choices to the light side and to the dark side. Where do you want to start this week, sir?
Let's start off with the dark side. Oh, right. Definitely. For the dark side here, number 5 on the list, the Ultra 30-year bond. That actually is down 3.06%. We have corn at number 4, down 3.89%. At number 3, we have Kansas City wheat. We have that down 4.01%. We have SRW wheat down 4.53%. And leading the dark side to the downside here is oats, down 5.22%, Mark. A lot of grains showing up on the dark side this week.
Yeah, it's a rough week if you are an ag bull. I have a feeling we might be chatting about that, but who knows? We shall see. First to the light side we go, sir. What's catching your eye?
Sure. Number 5, we have Brent down, up actually 2.53%. Then we have Bitcoin up 3.47%. Last week, it was actually at number 2 on the light side, which is actually very interesting. Number 3, we have soybean oil up 3.7%. At number 2, we have palladium, which gets no love at all, up 3.72%. And then at number 1, we have the consumer discretionary sector up 5.53% and continues to see a lot of volatility. A lot of that's probably being driven by Tesla. So that's what we have for light side and dark side for the week so far.
Some might say these markets are terrific, sir. That was a pun we beat to death on our last show. I promise listeners, no more bad puns. We did a lot of them on the last show. Instead, let's keep on rolling right on into the CVOL, listeners. What's lighting it up on the CVOL front this week? Remember, you can run these reports for yourselves. Just type CME and CVOL into whatever browser you're rocking out there these days. Once you do that, make sure you set your high-low range to 1 week. If you're listening around today, if you're listening a little bit in the future, I may have to play with that slider a little bit to line it up with the show. And then, of course, I like a nice grouped list. Of course, you also want to go to the aggregates tab. You want to see the aggregates. You can break down each complex. If you want to just mainline ag product CVOL, you could do that. We're just going straight for the aggregates. All right, let's kick things off. Top of our list this week is the Treasury yield vol, a 109.03. So definitely the spiciest number on our list as it is each week. Up nearly 2 points today, about 1 3/4 points today. And on the week, it's had a range of 107.25 to the downside and 114.63 to the upside. So we're kind of a mixed bag on the CVOL front this week. We've got a lot of vol trending lower at or near the bottom of its range, but a few bucking that trend, and this one would come in there as well. It's kind of not quite in the middle, but in the lower, let's say, portion of its range for the week. Below it, we have the aggregate ag product CVOL, 20.97, up about 1/4 point today. On the week, the low was 20 3/4, the high 21.32. So hanging out close to the middle of its range out there this week as well. Then we've got below it the Treasury price vol, and we know that's a low number, 5.93 today, up about 0.05 on the day. It's not a huge move out there. Today on the week, it's had a range of 5.87 and a high of 6.22. So hanging out towards the lower end of its range out there as well. And then we have the FX CVOL, 8.31 today, kind of unched on the day. That is 0.01 off of its low for the week, listeners. The low was 8.3, so obviously hitting that yesterday. The high, 9.12. So FX vol gently drifting lower out there as well. And then below it, we have the aggregate commodities CVOL, 33.36, off about 0.5 point today. That is the low for the week. The high, 34.94. In fact, everything else we're going to talk about at their low level for the week, which is kind of interesting. Below that, we have the metals, 16.03, off about 0.6 point today. That is the low for the week. The high, 17.59. So coming in over 1.5 points on the week. So kind of hitting some metals vol this week. And at the bottom of our list this week, we have the energy aggregate CVOL, 49.12, off nearly a full point just today. That is the low for the week. The high, 51.49. So energy vol coming back to earth this week as well. All right, a lot to unpack. We're seeing vol mostly trending lower. this week, Kevin. We also saw a lot of ags in our dark side. That said, soybean oil sneaking in to the light side. So there's a lot of ags, there's a little bit of crypto, there's a little bit of kind of everything out there this week. What floats your boat? Where should we start our journey this week, sir?
Let's start in the ag complex. That's actually been a very interesting one.
All right, then, to the world of ags we go, listeners.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, welcome to the wild, sometimes tasty world of ags. You know where to kick this off, of course, cmegroup.com/TWIFO. Once you're there, go into that asset class drop down. Pretty easy to find the ags. They're right at the top of the list under agriculture in the asset class. Then we're going to kick things off in grains and oil seeds. And then from there, we have kind of an embarrassment of riches. Maybe we'll just start in corn because it is kind of the big dog of the ags complex. It's coming in at number 4 to the dark side this week, off nearly 4% since our last show. Also putting up some numbers this week. Usually we expect corn to be around 400, maybe 450. 515,000 contracts on the tape this week, so over 500,000 contracts. So that's nothing to sneeze at in corn. By the way, coming into the start of the show, we're at a 448.5 in that front future. That puts it off nearly 16 handles, or about 3.4% since Monday. So obviously a lot of that sell-off has come this week since our show at the end of last week. All right, that's some table setting. Mr. Kevin, what is catching your eye in the king of the ags, the corn, sir?
With corn, just in general, we have several different factors that are kind of taking place. The first one is, obviously, we're getting ready for planting season. You guys are out there in Chicago, you see those guys working the fields and getting everything ready to go. So we're in that 6-week to 7-week period where we're kind of crossing our fingers, hoping that you don't get any type of Arctic blast. You need to have that soil at least 50 degrees or higher to get a lot of these crops in the ground, from soybeans to corn and things of that nature. And the weather events and the weather forecast have actually been looking a little bit favorable. So you're seeing some downside pressure on the corn front because of that, along with maybe some of this tariff policy that's kind of creeping into the market. And the last thing that's also impacting the grains just as a whole is this ceasefire, or this partial ceasefire between Russia and Ukraine. And it does appear that one of the items that Russia might be able to concede here, or actually get some greater access to, is global grain shipments. Black Sea is going to be off limits when it comes to attacking. And then Russia's also going to be opened up to providing their fertilizer products globally again as well. So a lot of that is putting pressure down on U.S. grains across the board, and that's probably why we're seeing a little bit of pressure when it comes to corn.
I like you're willing to talk ag. Sometimes when I bring up ags, people turn green, pun intended. Here goes another bad pun. I apologize. Listen, it's a day of bad puns here on the network. But let's get out there and see what's lighting up the tape. Like I said, it is a pretty hefty day out here in corn options, over 500,000 contracts. Of that, about 33%, so pretty much exactly a third, going up in the May contract that has 29 days to go. We're going to hang out there, listeners. Like we said, at about a 448.5 in that future. What's the vol, you might be asking, in May corn? 25.64, up to almost 2.5 points on the week. Skew-wise, not a wild time in corn. Sometimes in the ags, we see some wild skew moves. We see maybe crazy pops to the upside and discounts to the puts, nice setups for collars. Not really seeing much of that this week at all. The skew is, in fact, I'm looking, if you scroll out a ways, it's a different story. But right here, where the lion's share of the paper was going up in May, the skew is a non-factor. Last week, the calls were 0.7% bid, so not even a point. This week, they are 1.8% cheap. So getting cheaper, I suppose, but not a huge move. The puts last week, 0.4% bid. This week, 0.3% discounted. So again, I consider most of that to be pretty flat. That said, if you go a little bit farther out, you go out to December of this year, and ags tend to trade on a little bit different schedule, listeners. You go out to December, then you're starting to see a little bit of a bid popping up like you might expect in these ags. About 10.5% bid were the D's calls last week. They've come in a little bit, still 7.5% bid, and the puts nearly 9% offered. So that's kind of the more usual setup you might expect, very favorable for collars and things like that. Whereas the more near-dated, certainly more liquid contract right now, kind of looking pretty flat on the skew front. No bias in either direction, which means maybe maybe we're poised to hang out here, or maybe we're poised to go somewhere and the market can't figure it out. Let's see what they are doing out there, listeners. They're putting up a lot of 470 calls in May. So I said we're at 448.5. The 470s leading the dance with about almost 20,000 this week. 19,667 to be precise. The big day yesterday and today, a little over 7,000 each. Worth noting the 460s also going up about 6,000 times today. So maybe there is some vertical action. So maybe you like that better, listeners, 460, 470. Either way, you're still a decent way out of the money out there, but a little bit better, obviously, if you're going 460 versus straight outright 470s, if you are indeed buying these. Wednesday, again, 7,300 going up, mostly opening. 5,000 on Tuesday, again, opening. Only a few hundred on Monday. So Monday, the quiet day out there. Also noting about 18,000 open on this strike. So clearly OI starting to pile in. Also worth noting there's 18,000 open on the 460s this week. So probably some related action. They traded almost 14,000 times this week, 6,000 today, and about 5,300 on Tuesday. Weirdly enough, nothing really to speak of yesterday when about 7,300 of the 470s went up. So if this was all vertical paper, it wasn't yesterday. So yeah, interesting stuff here. And there also are some puts sneaking into our top 5 this week as well. In fact, coming in at number 2, we have the 440 puts also in May, going up about 15,000 times this week. The big day for those also Wednesday, 7,300. So lining up numbers-wise almost exactly with the 470 calls that day, which is kind of interesting. Maybe we're seeing some risk reversal or indeed strangle action. Interestingly enough, that paper on the puts on Wednesday was closing. So 7,300 mostly closing there. About 5,000 today against an OI of 16,500. So maybe some folks seeing, we sold off. So probably also some profit taking if they were long those puts. Either way, it's kind of fascinating. The paper, kind of interesting, kind of all over the place, Kevin. Any of this come as intriguing or perhaps surprising to you? A lot of May stuff, a lot of stuff focused around the at the money, sir.
Yeah, not too much of a surprise there. I would also kind of suspect that on the D's contracts, you're probably going to get a little bit more bulled up. Because that's usually when you start seeing, projections out for the next planting season, which is going to be 2026, calendar 2026 here. And then also looking at those strangles, and the straddles and strangles just in general, you're in a very volatile time right now where we don't know. Weather can change on a dime and it can change prices on a dime. And once again, if we don't hit that window and we are delayed by 3 weeks, 4 weeks, when it comes to planting, it will have an impact when it comes to yields as well as pod sizes especially when you're talking about soybeans. So looking at some of this aggressive action, and it's kind of messy all over the place, kind of will probably align with the price action that we will see over the next couple of weeks as well. I would not be surprised if you continue to see either a downside move down to that 436.5. You can make a case, and then once again, any weather premium potentially up to 475.5.
Let's look at Dees really quickly since you're talking December. That future, listeners, 442.25 right now. And the action out there, the big dog in December, the 420 puts. So about 22 handle out of the money puts, listeners, trading about 7,500 times. The big dog also Wednesday. So Wednesday, a very active day for corn, listeners. About 3,400 going up. Looks like mostly closing. So again, folks, kind of bailing on those puts. You can see that future also selling off in December. It's off nearly 9 handles on the week, or nearly 2%. So you can maybe see some potential for profit taking if they were indeed long those puts. But that's kind of the big dog out there. As I scroll a little bit farther out, that's pretty much it. The 420 puts also got 440 puts going up as well. So interesting stuff out here, but let's keep rolling. We are talking ags today. Which other ags are lighting up your tape this week, Kevin?
Well, if you kind of look at the wheat complex, that's another one that if you bring up a daily chart, wheat has been down 4 days in a row, 4 sessions in a row for so far, but since the 18th, we've only had one green day, and it's a very small green day. So a lot of selling pressure happening. And we, once again, kind of looking at these global dynamics with the wheat trade, and Russia and Ukraine are actually some of the bigger suppliers in the Middle East and North Africa of wheat. And so if they're going to, or especially Russia, able to expand some of that exposure and hit these markets that have been shut off to them for the last couple of years, that's also going to put some negative negative pricing pressures on the United States and for demand. I think there's also a little bit of concern around India and their consumption. It sounds like they might actually be able to sustain themselves this year. I think that was a big risk last year. India is usually one of the only countries that actually grows a significant amount of wheat, but also consumes all of it. They're rarely an importer of wheat across the board for the most part. And so that also could be pushing some prices down as well. I think we're just seeing a little bit of a restructuring and a shuffling of international trade when it comes to the grains as well as livestock. And so keep that one on the radar over the long term. That could actually bring prices down for the consumer here.
We could all use a little bit of price relief when you head over to the supermarket, listeners. So to the land of wheat we go. Pop out of the corn, listeners. And you're going to stay in the grains and oil seeds. It's going to go down one slot to SRW wheat, a.k.a. Chicago wheat. Pretty easy to find. If you're wondering, again, why we choose Chicago wheat over KC wheat, they were both on our list this week. KC wheat, number 3, off 4.01%. Chicago wheat, off about 4.5% at number 2. So obviously selling off more, but also volume-wise, it's doing roughly 10x. We got about 15,000 contracts on the tape for KC wheat versus 159,000 for Chicago wheat. So obviously the more active of the two contracts as well. So don't send in all your hate mail, KC wheat fans out there. We're going out to Chicago wheat. But right now, like we said, about 159,000 contracts on the tape. Where is Chicago wheat? You might be asking. It's at a 531 and a half, listeners, in the old in the Chicago wheat out there for this week. That's off nearly 27 handles. 26 3/4 handles are nearly 5% just this week. So about 4.8%. So really pretty much all of that sell-off we're seeing since our last show in Chicago wheat has come this week. So interesting stuff. A rough week out here for the ags. Of that paper, it is heavily dominated. 68% in the May contract that goes away in about 29 days, listeners. So we're going to hang out there as well. The vol in Chicago wheat, listeners, 23 2/3, coming in aggressively, off 5.5 points, which is kind of interesting because it looks like this May contract, which is the most active, is also an interesting little nadir when it comes to the vol term structure. If you go narrow dated contracts, go away in about a week, they're trading at a 35 vol. And if you go out farther, if you go out to July, 31 vol, 30 vol in September, December, a 28 vol. It's a little closer, but still, May, clearly they are annihilating vol around the nearer dated planting and harvest cycle out here. So interesting stuff. Again, that's why we say that the ags tend to play by their own rules of engagement, which makes trading across the term structure sometimes pretty intriguing as well. Skew-wise, the calls are where the action is. 9.5% bid last week. This week coming in a little bit, 8.3% bid. The puts last week, 1.7% discounted. It kind of threw me, listeners, because the puts this week are a little over, actually, 7% discounted. So the puts getting annihilated out here this week, listeners. 7.1% discount to the puts. So nobody wants the puts. Everybody wants the calls. I've said it before, nice setup for a collar if you're intrigued, but kind of interesting that they're just annihilating those puts. What is the big dog out here in Chicago wheat this week, listeners? It's the par calls, these 600 calls, doing 12,300 contracts out there this week. So again, we're only putting up about 159,000 contracts. That's actually a pretty big clip. And it looks like folks are bailing on these quite a bit this week. The big day was Wednesday, 5,000 going up on Wednesday, mostly closing. 3,800 on Tuesday, closing 2,400 today against the remnant OI of 9,500 and 1,100 on Monday. So folks bailing on the par calls this week, which again, we are selling off pretty aggressively. The fact that skew comes in a little bit, also maybe a hint that some folks were long those and they're getting the heck out of Dodge. But either way, folks closing for size on the par call. Same deal on the 580s. Folks getting the heck out of those as well. Trading about 9,300 times this week. The big day also Wednesday. 6,600 contracts on the tape. 1,300 on Tuesday. About 1,100 on Monday. Only a couple of hundred today. Closing all week long. Remnant OI on that strike about 12,500. So folks bailing on the pars. Bailing on the 580s. Again, I guess if you were long some upside, it's been a rough week for you. And if you were short those, maybe you wanna take your profits now while you can. There was some put action. They are the pars in the other direction, the 500 puts going up 8,200 times. Almost all of that today, listeners, 7,023 on the tape today. The OI is only 3,800, so clearly opening on these 500 puts, listeners. These have about 29 days to go, so are you a fan? You like that strike, listeners? 500 strike in about 30 days? Or would you be a buyer or would you be a seller? I'll see if I can go dig up some prices for those as Kevin regales us on what he thinks about this paper so far. Maybe not entirely surprising, Kevin. People like the par strikes in the ags, and we're seeing the 600s to the upside and the 500s to the downside leading the dance this week, Kevin.
Yeah, well, we are seeing that, and I'm actually kind of curious to see what that structure is looking like, if they're kind of selling that strangle, thinking that they're not going to see a massive move outside of that range. That could be another factor here. The 500 is actually very interesting because last time we kind of got to that level was August of last year. And if we do see a little bit more of a bust to the downside, unfortunately, right, that could also push prices higher. I think there's also a really big acreage report, a planted acreage report that comes out this Monday, Mark. So keep your eye out on that. I'm sure the ag space just in general is going to be impacted by that number. Maybe that's another reason why we're seeing some of this paper getting ready for some of that volatility. I would be kind of surprised if we see acreage planted increasing, which would push prices lower. I would think that we would probably see acreage planted actually coming in a little bit, but we'll see. We'll see. But right now, once again, the price action is kind of saying maybe a little bit lower, even though we're kind of hitting a key area of support here, about 525.5. So we'll see how this all pans out here.
Looks like those May par puts, Kevin, traded for about $5. A huge block, nearly 1,000 traded this morning for about $5. Others for about 4 3/4 or so. So $5, nothing to sneeze at. And then the 600s traded for around $2.50. So I guess if you like that strangle, Kevin, $7.50.
It seems a little cheap. A little cheap if I'm selling the strangle. You better hope that you don't see a massive move to the upside. But you're buying it, yeah, I would say probably relatively a little bit cheap, just given the dynamics that are taking place right now. Just kind of depends on what side of the trade you're on, you know?
You like that, listeners? Folks are obviously bailing on these 600s in May, so they're getting prices around 2.5. Maybe looks on the low end 2.25 there. So would you be closing those at those prices? Would you be buying or selling? Are you a fan of maybe you could do that risk reversal as well for obviously $2.50 if you are so inclined? If you think you're heading to the downside, maybe you finance some of those 500 puts with some 600 calls. A lot of things you could do out here in this, but either way, that's what's leading the dance out here in Chicago wheat this week. All right, Kevin, you want to hang out in the ags, or is there more catching your eye? You want to traverse to another complex, sir?
We could go over to the energy complex. What I will say, though, just to pinpoint this, soybean and soybean oil right now catching a massive bid. Export numbers were breaking anybody's expectations here, so keep your eye out on that over the next couple of weeks. There might be some additional paper that hits the tape in the option space here.
We can hit soybean oil really quick since we're hanging out in the ags right now as well, listeners. Pop out of that drop down, keep it in the grains and oil seeds. You're going to go down about 3 slots to soybean oil. Like I said, soybean oil, one of the few ag-related names lighting it up to the light side this week, taking the number 3 spot, up 3.7%. Trading 44.26 in that front future, listeners, up 2.25 points, or about almost 5.5%. Just since Monday, obviously go back to the end of our show last week, up 3.7%. 72,000 contracts on the tape, so nothing to sneeze at out there in soybean oil this week. Looks like almost all of that, 71.5%. Again, May is where the action is in the ags this week. 71.5% going up in the May contract that has about 29 days to go. So we will hang out there as well. The vol there at a similar level to what we've been talking about, a 26.84, up about 1.7 points. So in a similar range, all these major ags we've just been talking about. Also not a huge skew phenomenon. Let's see how the calls come in this week. 4.6% bid they were last week. This week, about 1.4% bid. So that call wing coming back to earth a little bit. The puts, 1.5% discounted last week. This week, about 2.7%. So getting a little bit cheaper are the puts, and also getting cheaper are the calls out there, which is interesting. Also interesting is that the big dog out there this week, I said we're at a 44.26. It's the 44 even calls leading the dance out here this week, listeners, doing about almost 8,000, 7,900 contracts on the tape out here. Kevin, you a fan of straight at the money, now slightly in the money calls in May, sir, or you prefer something else?
No, when I trade ags, I actually do like at the money, just to make sure that one, there's going to be a market there for it, and two, if you get a decent move or even a small move in the direction, but maybe you're a little bit skeptical of it, there should be enough premium there because of that delta to be able to offset. Every once in a while, it's not often, but every once in a while, you do see drop bids or even drop offers on futures options. So at the money, kind of, it's a little bit more expensive. Yeah, you have that delta risk if it goes against you, but I like it because it gives me a little bit of a better market, better spreads.
So if you are intrigued by those, listeners, they're trading right now for an average price of around $1.27 for those May 44s. Remember, they got about a quarter of intrinsic value on there, a little bit of meat on the bone, and $1 worth of extra juice, shall we say, out there. So interesting stuff if you like those. Are you a buyer? Are you more of a seller? Or you want to just wash your hands completely of soybean oil? Either way, hit us up. Let us know. You probably got time for one more complex, Mr. Kevin. Where should we head to next?
Let's hit up the energy sector.
All right. To the wildly turbulent waters of energy we go, listeners.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, welcome to the wild world of energy. Go down 3 slots in the asset class to energy. Then we're going to go from their product family. There's a bunch of choices, including in terms of what's lighting up our movers and shakers this week. The only energy we have, it's a rare week without nat gas or WTI, but we do have Brent making it into the light side, up 2.5% this week. Kevin, what's catching your eye in the energy complex this week?
Well, Mark, I think the last time that I was on, we kind of talked about the $65, $66 level as being a very strong area of support and one that we have to defend if you're energy or if you're an oil bull out there. But we saw this decent little consolidation pretty much at the front half of March, and you're seeing a little bit of a breakout to the upside. And we did touch that $70 level yesterday. That's kind of going to be your first area of resistance. And the next one that I'm going to be focusing on is around $72.90. But you are getting some EIA data as well as some API data that is showing draws on crude oil inventories as a whole, as well as the byproducts, distillates, as well as gasoline. And the thought process here is that you're going to actually see producers here in the United States leveling off their production in order to maintain margins, which is another reason why you're seeing energy stocks catching a pretty healthy bid. And there's actually been a fair amount of paper on the options front for the most part here, if you're even looking at just WTI. But I think this one is an interesting one because we've been at lows. Do we start seeing it ratchet up because of the summer driving season? And diesel and gasoline, out of all three, probably have actually a better bid to the upside or better chance of a bid to the upside because inventory levels for diesel right now is actually below the 5-year average. So very tight supplies there. Any type of meaningful jump that you have in demand is going to push prices significantly higher.
Let's check those prices, shall we? All right, crude oil going to go in the product family, and then WTI, obviously, yeah, we're hanging out right near that so important 70 handle, listeners. Whenever we break it to the downside, people worry, look out below. When we break it to the upside, they worry, look out above. 70 has been an inflection point we've been talking about for a while here in WTI. It doesn't seem like that's going away right now as we're hanging out. 69.91, up 1.63 on the week, or about almost 2.5% out there. Not enough to break into our light side top 5 for the week, but a pretty active week nonetheless. Also active on the volume front, 530,000 contracts on the tape. So over 500,000. That is a pretty active week out here in WTI land. Once again, we're hanging out in May, this time a little bit closer to home, only about 20 days until expiration there. Vol-wise, where are we hanging out, listeners? What is May vol in WTI? It's at about a 24.88, off about 1.5 points this week. So as we mentioned on the CVOL segment earlier, energy vol kind of coming back to earth a little bit this week. Skew-wise, kind of an interesting beast. Puts are leading the dance yet again this week. The puts are 5.6% bid. That's up from 4% 4.6% bid last week, listeners. So getting a little bit juicier are the puts. The calls, 1.5% discounted last week. This week, 3.4% discounted. So the calls are cheaper. The puts are bid. Looks a little bit like an equity, kind of the polar opposite of the skews we were just seeing in the ags, and clearly not a favorable setup for a collar. Nonetheless, 65 puts are leading our dance out here this week in May, listeners, doing 21, almost 22,000 contracts this week. The big day was Tuesday, almost 12,000, 11,700 going up on Tuesday, all opening there. Wednesday, 5,000, again opening. Today, about 2,500, and Monday, 2,600. Closing on Monday, obviously today's paper against an OI of 25,000. So 65 puts, listeners. Again, almost 5 handles out of the money. Are you a fan of that strike? We also have the 70 calls. So again, we say that 70 strike, an important inflection point. They're also trading pretty actively this week. A little bit less than half the volume, though, what we're talking about here. We got about 11,000 on the tape. The big day was Wednesday, 4,000 on Wednesday, 2,600 today against an OI of 9,400 out there, listeners. And then we've got about 2,000 on Tuesday, mostly opening, and about 2,500 on Monday, slightly closing. So 70 calls, you like those, listeners? That is pretty close to at the money call, or the 65 puts. Again, intriguing stuff out there. Kevin, either of those strikes float your boat, sir?
I think if you're selling the 65 puts, that might be an interesting one, because once again, it's been a very sticky level for us to be able to hold. And so if you're able to kind of get a little bit of premium there, if you do believe that buyers are going to step in, that might be one that you actually do see some premium rolling off. And then also, you don't have to do it naked short, right, on the put side or even the call side, especially for futures options. That's a little bit dangerous unless you have the cash in your accounts. You can look at even selling a 65 put, buying the 60 put, doing a put spread. You're going to get a little bit less of a premium for that spread, but at the end of the day, the future stays above that 65 level at the time of expiration. You profit. 75 on the upside is tough for me, because we're not seeing anything on the consumption front that really says that demand is going higher. Everything is still logistics driven and supply constraint driven as far as production, and that usually doesn't lead to higher prices. So until we see some demand increasing in China, I think that could be one that could probably sustain a bid, or we do see the summer driving season and consumption kind of ramping up a little bit aggressively here in the United States. That could also catch a bid. I did see a statistic, though. Travel between the U.S. and Canada, if you're looking at airlines, have actually dropped substantially over the last couple of months. That could also actually put in a little bit of pressure to the downside when it comes to jet fuel. Once again, that's not a good demand driver. So overall, I think there is still a resolution to price right now. I would be very tactical with it. 72, probably anything above 72 over the next month or so, Mark, in my opinion, is kind of icing on the cake if you're a bull right now.
Yeah, drill, baby, drill. Hard to see the bullish argument when that's the mantra coming out of DC, right? Looking right now, we've got, let's see, if you're interested in those May 65 puts, they're going up for a whopping 36 cents on average today, listeners. So if you're a seller, you're not collecting a ton of juice, but you're getting something. You can go the Kevin route and maybe pick up some downside puts if that does spook you to sell those. 70 calls, a little bit juicier, $1.50 on average today there, listeners. So obviously a little bit juicier if you were, for some reason, so inclined to want to buy that call and finance it with the put, do a little bullish risk. I guess you could do that. Nothing stopping you. I'm not sure if, again, I'm kind of leaning like Kevin. It seems like most of the impetus is to the downside, but nonetheless, those 70 calls. So I guess on the flip side, if you wanted to override a little bit, maybe against the future or maybe just against something else you got, then the 70 calls trading for $1.50 out there today. Which way are you leaning, listeners, when it comes to the future in crude oil? Unfortunately, that music means no future for this show, at least for today. But don't worry, if you want more content in your lives, we'll be back again tomorrow to break down the week that has been from a vol perspective. And spoiler alert, it's been another wild one, listeners. I'll be joined by our good buddy, Mr. Dr. Bix, and who knows who else will make it onto the show. That's why you got to tune in every week to find out. Then if you want to come back one final time for the official after party for Vol Views, you know where to go. theoptionsinsider.com/pro is the place to go to check all that out. And Kevin, where should folks go if they want to check out all of the shows you're doing these days?
Yeah, you can check me out on the Schwab Network. So you can go to schwabnetwork.com. You can check it out on YouTube. You can download the app. There's 8,000 different areas where you can be able to view me on a daily basis. And if you want to follow me on Twitter or X, you can follow me at KG Bull and Bear. You can also follow me on Twitter, or not Twitter, on LinkedIn as well. Just type in Kevin Green Schwab and I'll show up. I don't know what my username. I got to figure out my username for that one eventually, but I appreciate you having me on, Mark. I hope everybody has a really prosperous trading, for the next couple of months and are able to weather the storm when it comes to volatility. So thank you.
KG Bull and Bear. What if I'm market neutral? What if I just want to harvest some risk premium? I can't follow you, Kevin.
You could always follow me, man. Anyway, I'm going to be tweeting about it and providing some articles around it.
All right, good stuff there. Make sure you're giving him a follow and check out his shows if you are heading over there to Schwab Land, listeners. You know where to find them. Pretty easy. That's going to do it for us on the network today. Like we said, back again tomorrow, noon Central, to talk some vol. And then after that, one final time for the week for Options Oddities. Then we're back again on Monday. Kick things off with the option block. Can the Rock Lobster find another trivia point? He found one this week. Can he find another one? We shall see. Followed, of course, by the crypto rundown. What's going to pop off? Talking about tokenized wine this week. You never know what's going to pop up on that show. Always fascinating. Tuesday, of course, for all you pro Q&A folks, we're back talking on the pro side with some great Qs and some great As, picking some of the best brains in the world of options and derivatives. Wednesday, of course, Options Bootcamp, as well as the sister program to this one, the Futures Rundown. You should be checking that out if you are intrigued by all things futures options. Then we're back again next Thursday, another episode, the TWIFO. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.